Hello guys, welcome to Earning Markets. This channel is all about financial market and the way of investing or trading your money in it. So today we will see that what is financial markets and its types. So let's start. Who don't have a dream of getting financially stable and make an exit from living the rat's race? It's too difficult to achieve that dream just by saving your money. Though you may save it in a regular intervals, but it can't give you the valuable returns. It doesn't even give you the returns more than the inflation rate or the increase in the prices of goods we buy. Let's take, for example, the increase in the price of petrol, traveling expenses, home groceries, college fee, rent fee, and so many increases our expenditure. So, just by saving your money in bank is just like decreasing the value of it by time. A saving account of bank may gives you 3 to 5% or a fixed deposit gives you 6 to 9% returns yearly, but it isn't that worth. So, what makes the valuable investors who are financially stable and had made the rags to riches? So, there comes a far better option than saving called as investing. As a renowned author Robert Kiyosaki has said that investing makes your money work for you. So, in what way and which stream should you invest your money? The most better option so far to start is financial markets. So, what does financial market exactly means? It is a market in which trading of financial securities takes place. The best example of financial securities are shares, bonds, etc. There are many types of financial tools to be traded in financial market. Some major types of trading which are convenient to all and its advantages can be taken by everyone are: first, shares. Share is a ownership in the company owned by the shareholder. For example, if you bought shares of Reliance Industries, you will be owning a part of it. Though the part in percentage would be too small, but you will also be the owner of it. And you will be getting benefits of dividends given by the company or elections in the company, etc. With every future growth of Reliance Industries or prediction of its growth, you will be growing your capital and yes, may reduce your capital with decrease in the profits of the company or having bad future predictions. Second, bonds. To make it simple and understanding, let's take an example. If a company wants to raise fund or capital for its business expansion and operations, it takes debt or loan from public and institutions. For example, if Tata Motor wants to expand its business in other vehicles, it may raise a capital from public and institutions at a fixed rate of interest called as bonds. The rate of interest provided by bonds are slightly higher than the fixed deposits, generally around 7 to 10%, but within the tenure of keeping the bonds, the bond prices and the rate of interest may change depending on economical conditions and changes in it. Third, commodity markets. Commodity markets is a place where buying and selling of commodities takes place. These commodities are goods which are generally from primary economic sector rather than manufactured products. For example, wheat, coffee, spices, or in metals like gold, silver, aluminium, copper, etc., or crude oil, etc. More than 50% of transaction of these commodities are purely a financial transaction rather than a physical trade. Fourth, foreign exchange market. It is a global market in which trading of currencies takes place. For example, you may trade in currency of one country with respect to other. Currency market is dependent on economical conditions of both the countries. Let's take for example two currencies, that is Indian currency which is rupees and American currency which is US dollar. With the good and growing economical conditions of US, there was a rise in dollar with respect to rupees. And as most India's biggest imported commodity is crude oil and it is traded by buying US dollar, so therefore with every increase in crude oil, rupee gets weaker. Fifth, derivative market. Derivative market is a market which is derived from financial securities like shares, commodities and currencies. It has a fixed expiry date and we will go in details about it in our coming sessions. Sixth, cryptocurrencies. It is a digital currency and an alternative currency to a physical money. This currency is designed to work as a medium of exchange. Its most popular example is Bitcoin. Cryptocurrencies are highly volatile and are too risky, as it does not have any financial base and is not suggested by the Supreme Court of India and was not given permission to be traded by Security and Exchange Board of India. Therefore, our channel will not discuss about investing in crypto. The content in our channel will be consisting of financial market and a proper way of investing your money in it, benefiting all the new investors, may it be student, working professionals, or a self-employed. Here we end our first video. Hope you like it. Stay connected. Thank you.